Okay, catch myself off guard there. Hello, welcome. It's the weekend video, and here is your host, Enda from bullwaves.org. And let's just chop right into this and get back into the swing of the things again this week. All right, I'm going to talk about Eurodollar, the main FX rates first, and then move on to the other big markets, obviously. So we'll start with Eurodollar. This is a 4-hour chart, and there's a couple of things going on here that I just want to point out. So far, we have 3 waves off the possible top here. Either one of those, you could call this a failed fifth as well, seeing as this is kind of more or less a 3 waves decline. But that's kind of up for grabs, whoever wants to fight that out. So far, 3 waves down. We broke to a slight new low today, and this is a spike low here. So that does suggest, well, it doesn't suggest anything other than the fact that we broke to a new low, but we have bounced off that in quite a sharp fashion as well. So the main takeaway from that is the alternate account is still quite viable. We may still have a rally in a third in wave C to complete wave 2 over here. Either that or we are bouncing in a minor second wave. So let's get into the short-term chart and see if we can get some invalidation levels at least. Okay, so a couple of things that I'm showing here. This could be the alternate count is showing a large A wave, possible B wave, and maybe I suppose it's about 60-40 now in my head that this alternate count could be correct. So we could rally in a C wave up to challenge 112.50 again, and then turn lower into wave 3. There's a larger alternate count that I'm working on as well, but I'm not going to dive into that just now. Also, we could call, as I'm showing right here, you could call this wave 1 and 2 complete. That's wave 1 and then expanded flat wave 2. And then maybe we're working on a wave 1 and 2 again to begin wave 3 down. I should kind of clear that up a little bit. Get rid, move you, and then do these. So either we're working on a 3-wave correction to a lower high again, or if we get a break of that wave 2 high, 110.96, that will kind of favor the main alternate account. You could also view wave 1 down at this low here. Maybe that's an ending diagonal or something. Wave 1 down, and this could be an A, B, C flat correction. So there are, let's say, a few different scenarios, as there has been recently for Eurodollar. I mean, well, actually, maybe for the last year, the action has been, anything but decisive. Let's say, and once I thought that we, we were underway majorly to the downside, then we get this spike back up, to challenge that kind of view. But until that can be ruled out completely, I'm going to stick with the scenario that I'm working on. Okay, for next week, there's 3 main possibilities. Either we complete a minor 3-wave correction, maybe somewhere around 110.50 or so, and then we head lower into wave 3 of 3, or we have wave 1 here, and we're working on a flat correction in ABC in wave 2, and then we head lower into wave 3, or the main alternate shown, we have wave B low in place, and now we're going to rally in wave C. So it all depends on what we see from here. A small impulse wave, 5 waves up, 3 waves down would suggest the alternate for wave C is correct. But we should know that by Tuesday, maybe. Well, let's see how the action kind of develops off this low here. Okay, let's get on to pound dollar. I'm trying to warm myself up here. I'm running cold at the moment. Okay, so the main thesis over the last while is that we've got some sort of triangle going on here in a 4th wave, and then we push higher into a 5th wave, which I should move over here in wave 2. Let's see, up 2. Then get you up there. So the challenge right now is, or sorry, the target right now would be up around the 130. Well, it's quite vague. It's between 130, let's say 50 or so, and 133.50 or so. So there's kind of a large band there that we could um, we could fill, but I would kind of favor the upper level there, maybe about 133 in a five wave move to complete wave five of C of two. Okay, so that would make this a C wave and five waves complete, and then we'd move lower again into a large third wave. So let's get into the hourly chart. You can see here we're working with this low being being wave E of four, a nice little impulsive move higher. Three waves down into yesterday, and now we're spiking again. So it's likely that wave three of five is now underway, and we should confirm that with a break of well, we should move that higher actually. We should confirm that with a break above 130.12. So key level, key resistance early next week 130.12. If we break that, then we are pretty much off to the races for wave five, and we should move up in five waves up to about that 132, 133 band. And that is cable. Okay, let's move on to dollar yen. Actually, before I move off, that low there of wave E at 128.26, but let's call it 128.30. Um, that has got a hold basically. So I will move that support. Move that support up to 128.30, and that's got a hold basically for this triangle to remain valid, and for five waves up to remain valid. Okay, so let's move on. Dollar yen. Wave B, or sorry, wave. I've got to update this as well. Should have done that before you started. Yes, I should have, but such is life. So we're still working on this triangle. Wave D broke to a new high. I was favoring the idea that we were moving down into wave E already. That got ruled out on, when was it? On Wednesday night, late Wednesday night. So after I closed the books, of course, the rally occurred and broke out above. For today, you can see here that we pretty much topped out if you're going on momentum alone. So, and it is looking like it's looking quite like um, a pretty labored move to the upside. So I'm calling this a wave C. Actually, I'm calling it an ending diagonal for the moment in wave C. It could also be a simple three-wave, well, complex three-wave move up. Either way, I think we're baked in dollar yen, and we should move lower down to about between 106 and 105 over the next couple of weeks. And this should be in a three-wave move, and then we should hit the low of wave E above 104.46, so above 105, just to be safe. And then we should head higher for the long term in dollar yen. I'm still expecting the dollar to rally more or less throughout the next bear market phase. I haven't been convinced otherwise on that yet. I know that a few different wave counts exist. Obviously, we're Elliott waivers, so there's always put two Elliott waivers in a room, they won't agree on anything. But for the longer term, I'm still pretty bullish dollar yen. Dollar yen, but dollar in general. And I'm bullish gold. And everybody questions me on the fact of asking me why am I bullish on gold if I'm bullish on the dollar? Surely they both won't rally or can't rally together. But yet I would suggest that nobody has a problem with both falling together. So I can't be correct on both rallying together, but I can be correct on both falling together, if you get my meaning. So that doesn't stand to me as a valid argument, even though lots of people are suggesting both gold and dollar will collapse basically over the next year. I can't see that happening either. Okay. Anyway, that's enough prognostication for the moment. Uh, let's get into the hourly chart for dollar yen. Okay, so I'm counting in wave C here. That goes. Let's kind of crunch this a bit. Off the wave B low, that's a pretty reasonable expanded flat wave B, and then we moved off that pretty rapidly in wave C. We could call it an ending diagonal, so this would be where the basic extents would just kind of crunch over time. So we've got this one. It should be 3 waves up in wave 1, 3 waves in 2, 3 waves up in 3, 3 down in 4, and ABC up in 5. This ABC in wave 5 can be counted with wave C as a complete 5 waves. You could call that wave 3 actually up here at the moment, and maybe triangle wave 4, maybe, possibly. We'll have to see on that one. But for the moment, I'm still expecting a turn down into wave A of E. So I have that kind of target at about 106. And unfortunately, we won't be able to confirm that unless we get a break of that kind of wave 4 level there. So that'll be 108.20. There's not a whole lot to work with on that. So as I've been kind of maintaining over the last while that this triangle is going to be, damn near impossible to trade anyway. So yeah, unless we get some sort of sharp move lower off that, and you can kind of, you know, uh, muscle your way in on that move, I really don't. I don't see a whole lot of tradable opportunity here unless we get like a pretty reasonable, um, low risk, lower high here that you can trade down into wave A. It's not for me though. Okay, so next week I'm expecting that move into wave A finally. I had been expecting this move to be it, but that never turned out. So let's look for wave A, B, and C over the next few weeks to complete a larger triangle move in dollar yen. Okay. Now, stock market. You know where I stand in the stock market. Do I even need to? Do I need to go through this again? Maybe I do for myself. Okay. I think we're topping. I've been proved wrong numerous times. The most recent high, we had a nice move off that high, and then we popped out to a new high this week. So it's been false kind of summits over the last while, and it's been kind of tough to bear. But I don't think there is any other way to view the longer term action. I don't think there's any other way to, and I can't see a bullish outcome to this. Uh, I have seen plenty of counts which suggest that this correction that's ongoing right now, or sorry, the action that's ongoing right now, is a kind of an expanded triangle in a fourth wave. I don't buy that myself, but even if that was the case, then we should break below 21,400. We should hit 21,000 over the next leg down before we look for any sort of recovery, be that a corrective recovery or a rally to a new high. Okay, so that's the daily chart. Let's get into the 4-hour chart. There's not a whole lot to say about it except for the fact that I think we're rallying, or we're completing in wave 5 of 5, and the hourly chart is showing some sort of extended fifth wave within that wave 5 itself. So I'm calling this fourth wave triangle, and then we've got wave 1, expanded flat wave 2, pretty clear 5 wave rally in wave 3. That's got 1, 2, 3, 4, 5. Running flat wave 4, and then 1, 2, 3, 4, 5 wave 5. This fall off the wave 3 high. You can read that a couple of different ways, but I'm calling it wave 4 for the moment, and the move off that is 5 waves up so far. So we're kind of just kind of drifting off the high at the moment. Nothing majorly suggestive of an immediate decline next week. This could be a short. If we pull that out a bit, we could be talking about some sort of short-term triangle here, maybe. But if we break below this 28,000 level again, if we push below 28,000, that will rule that let's say fourth wave triangle out. It's kind of splitting hairs at the moment. No matter which way you look at it, it's splitting hairs. Actually, I'm going to leave that triangle in for myself. And here, I will put that for an alternate wave 4, alternate wave 5, the short term. And insert shapes, ellipse. Let's call that alternate count short term. And we still move lower off that high. There is no bullish outcome to this, and that's kind of my main point. And in case you didn't know from following what I've been talking about lately. But the next move down, like I said, it should, over the next few months, 3 months or so, we should be pushing towards 21,000 again. Nobody wants to hear that. I mean, that's still a significant decline. That's a 7,000 point decline, which is about 30% correction. If that's the height of it, which I don't believe it will. I mean, if we get a 30% correction off here, that could bowl over a whole lot of companies, and that would put a whole lot of credit stress in the system, and the system does not want that right now. Okay, so next week, let's see if we get any sort of push below 27,600 again, as that previous fourth wave level there. That would kind of indicate that we're done with this, and we're moving lower again. But if we get this consolidation continuing with one more pop, that will suggest that this is a triangle and we're rallying in final wave 5. So that should complete up around 28,250 to 28,300, and then we move lower. In general, I am not. I'm not a bull. There's very valid reasons for that. Okay, let's get into gold. And today we finally spiked a little bit, which is at least hopeful for the bullish count. I do like the fact that we're spiking, even though stocks are hovering at their all-time highs. And let's get into the 4-hour chart. We are still, we've corrected for a long time now, actually for a good 3 months now. Since the early September highs, so most of September, October, and most of November done. So we've got 3 months of sideways action, and we've barely lost, $50, $100 in this whole slide. So the thesis that gold is going to collapse is qualifies as suspect at a minimum, in my mind. So I think this is just a pretty bog standard correction, and we should move higher out of this again. We've got some significant action that should happen before that will indicate that the rally is underway. But let's get into the hourly chart for that. So I'm looking for 5 waves up. We could have 1 and 2 complete. And if we break above 1479, say 1480 again, that will indicate that we've got a third wave up underway, and that should push up towards that previous wave B at 1516. So we should wave 3 of 1 should break 1500 again, and it should happen with ease, I think. So let's see if this spike holds early next week, and we get that long-awaited rally now at this stage. That's the short-term outlook for gold. Let's see if we can build a bullish Elliott wave signal off this action. Okay, crude oil. We were looking for a top in again, and today's action seems to be reasonably confirming that reasonably. Um, Looking for a third wave decline. We got a nice spike lower today, so I hope some of you were in on that. I keep mentioning how crude oil seems to have its feet planted more firmly on the underlying um, stresses within the general economy or the market itself. Crude oil seems to be a little less, what you call it, a little less susceptible to bullshit. So the crude oil should turn before the market, before the general stock market does. And in general, over the last year or 18 months or so, it has done. So I am expecting that to continue. I'm calling this a wave 1 and 2. This wave 2 has been, long, drawn out, arduous, whatever way you want to look at it. And we've hit a pretty standard and solid 61.8% or 62% retracement um, on the previous decline. So we had this previous decline off wave 2, and now we're right up, bumping up against the 62% retracement level, and we've spiked lower pretty impulsively off that level. So if that's not a hint of what's to come, well, then we'll never get hits, will we? Okay, so let's get into the hourly chart. That I'm calling that wave 2 high, and I'm calling this wave 2 a double, or depending on how you want to count that. That's a pretty simple three-wave pattern. So a double combination, so a complex correction to the upside involving three waves up in A, three waves down in B, and three waves up in C. We've got a spike lower, we've got a slight lower high, but still, nonetheless, it was pointing to something brewing, and we got off that wave 2 high, we got a nice spike lower again and a three-wave correction. And today we came in with a pretty hard sell. If this is wave 3 of 1, well, then wave 1 itself should continue lower down to, I think the most significant support level right now is about 53.70. So we've got this previous wave B at 53.70. So let's see if we can get 5 waves down into that B wave, and hopefully a larger kind of bearish lower high will develop over the next week or two, and then we should be looking for a pretty significant decline in wave 3, or a continuation lower in wave 3. But things are looking pretty bearish, pretty good for the wave count, pretty bearish in general for crude oil at the moment. Okay, here's the S&P. 4-hour chart showing the exact same as crude oil, or sorry, as Dow. Obviously, we've got a triangle in wave 4, and we've pushed higher into a fifth wave. That wave 4 ended in October, and we're pushing off that. You can count it as a pretty complete 5-wave pattern to the upside. On the 4-hour chart, daily chart also. If you look here on the daily chart, we've got pretty serious, let's say, momentum death for the last couple of weeks. We have it topping out at an extreme overbought level, and we should, I mean, the only way from here is down, and that should bring the price down with it. We've got, on the 4-hour chart, we've got a pretty reasonable divergence developing off, let's say, the interim highs in momentum developed up in that third wave up of wave 5, so that you would expect that highest momentum within that third wave. And now we're kind of creating lower highs and cresting again to head lower. So the wave count is pointing lower, the momentum is pointing lower, both on, well, I suppose on a 3-degree level. You've got daily momentum, 4-hour momentum, and hourly momentum now, all kind of pointing the same direction. We've come to a halt at the recent high, and I was contemplating there during the week that if you take the characteristics of, let's say, the dot-com bubble in 99 2000. The main characteristic of it was an internet stocks kind of technology bubble. And if you take the main characteristics of the 2007 bubble, the main characteristic was a credit bubble. And if you add those two bubbles together, we have now got in the midst or at the top of a technology and credit bubble just added together. A fuse are emerging of the 2000 and 2007 highs all in one. And if you actually take the price, the final tick on the S&P in 2000, I think it was about 3150 or something like that. Or sorry, 1550 or something like that. And you add it to the 2007 high, which was around the 1500 level again, you actually get 3126. So not only does the characteristics of this current market mirror an addition of both 2000 and 2007 high, you actually get a price that mirrors the addition of both 2000 and 2007 high. I just thought there was a certain poetic justice to that. I add to that everything else that I've been talking about for the last year, and God, we've got the makings of an absolute calamity, which I hope that we can survive together. Okay, I'm still expecting this kind of initial move down, and nothing will happen on my front until and unless we get 5 waves down and a 3-wave recovery high, sorry, a lower high. So looking for 5 waves down to begin. If it's underway now, all the better. So let's see if we start cutting out some of these previous shoulders over the last few weeks. We've got a kind of a triangle low here. Where's that coming in about 3080. We've got fourth wave possibility here at 3090. So we've got 3080, 3090. If we break through 3080 and if we break through that band of support, then we should be looking at well, especially if it's in 5 waves, then we should be looking at preparing ourselves for a bearish signal developing off this high. Okay, so that's the S&P. Now let's get into silver. Silver again, looking for a 5th wave rally. Hasn't arrived yet. But in my mind, that's where the market is pointing. We've got a 3, 3, and 5 correction into the recent low. We've got a stalling of it. We haven't got any, let's say confirming price action to the upside just yet. But then again, we haven't got a continuation lower either. So I think we're in the ballpark for a turn to happen, and I'm waiting for that to happen. Waiting for some confirming price action on that front. If we look at momentum again, we are even more oversold at the recent low than we were, comparatively oversold to the lows of 2018, where price was at 1380. Even more oversold than the wave 2 low here at 1420, or 1427. And now we are still sitting at a higher low at $17, so like 30% higher than those previous lows, and an even more oversold situation. So in my mind, that counts as a pretty bullish signal. If the price hasn't collapsed yet, people are more bearish. That tends to suggest that we have another leg up at least to come. The action looks corrective to me, and I am preparing for a bullish signal to be generated over the next couple of weeks. So I want to see a continuation higher in a third, and some sort of 4th wave correction, and then 5 waves up complete off the recent low. So let's see if that traces out, if that happens. 1722 or 1721.90, or you call it 1722. If that level breaks and we get a nice impulsive move above that level, then we are on for wave 1. I think we'll get a reasonable confirmation of that if we break 1760, so that's wave one level there. If we break above that wave one level, then we should be talking seriously about 5 waves up in play. But I would like to see wave one break out above that wave B level there. So that's 1830. So let's see if we can kind of start ticking off some of those mile markers over the next week or so. Okay, we have treasuries. I have a couple of operating accounts at the moment, all of them pretty much bearish for treasuries. We have 5 waves down into wave one. We either have wave two complete, or we're building a larger flat wave two, which would tackle 131.98 or 132 again before heading it lower into wave three. We are the main alternate account for the moment would be that wave two is already in, and that we're working on an expanded flat wave two at one lower degree. So wave one, two, wave one, and two, and three should develop. So we're just kind of in that period where there's a fine line between a couple of different ways of viewing this, but I think those will kind of culminate in some sort of signal over the next week or so, which will indicate which way we're actually going to go on this, and confirm or deny one or other or both of those alternate accounts. Okay, for the moment, we've got some sort of 3-wave pattern developing off that interim high here at wave 3. If we're looking for a running flat, then wave C here will complete in the region of about 131 and then head lower. If it's going to be a simple flat in wave 2, well then wave C will tackle that 131.90 level again. For the moment, trend channel is suggesting about 130.75, running flat, 5 waves up in wave C, and then head lower again to begin wave 3 down. Okay, that I think does it. Outlook for next week on bonds: short term up, long term down. So let's. I'll be back on Monday, obviously, so we can let's see if we get some kind of clarification in the bond market on Monday. And I wish you all a great weekend. Happy Thanksgiving to all my American friends, US friends, and have a nice weekend. God bless. Be good. See you on the flip side Monday night. Bye bye.